It's Friday and 1:30 p.m. in Lagos, same time in London. And we're bringing you markets analysis and insights on Business Incorporated, live from Channels Television. Here's what's coming up on the program. Zimbabwe faces tobacco export ban threats from European Union. And Ugandan drivers protest as South Sudan holds onto impounded maize trucks. And Ethiopia set to launch first ever securities exchange. Thank God it's Friday and welcome to the program. I'm Will Ibong. Let's kick off with the markets. First up, Africa, where markets were trading mostly positive at intraday. We saw major indexes like Nigerian exchange trading 0.33% up, still at the 62,000 level. And we have South Africa's exchange at 0.77% up, very strong in green territory. Meanwhile, Egypt, the EGX 30 was closed on Thursday for the week, while Kenya closed Thursday's trading session positive. Now let's see trading activities at the NGX and a quick look at what's making the moves on the floor of the exchange as we speak. We were going to be talking to Rotimi Fakayejo, capital market analyst. Good afternoon, Mr. Rotimi. It's good to have you on the program. Mr. Rotimi, right now we're still at the 62,000 level. Can you tell us what's going on at the NGX? What stocks are making the moves right now?
Well, the banking sector stocks are still having the best of the day. And we have the likes of Zenith Bank, GT Bank, Fidelity, Access. Virtually all the banks are actually on the move as at now, even FBN Holdings. And I think they will continue to rule the market as long as investors continue to find interest in them, and there remains a very positive upside for each of stocks in these securities. Likewise, for other sectors, we are not seeing a downward trend or a sell down in any of them. So the market is still very much alive with a lot of bullish activities. And with the kind of volume that we saw yesterday in FBN Holdings, it re-emphasizes that, yes, indeed, investors have positive outlook for the market in the medium term and even in the long term. So we believe strongly that what we are seeing right now is just not the real thing. The real thing is still yet to come. And by the time it comes, everybody will be very much alive and to see what we are talking about now. And I actually foresee a situation whereby by the end of the year, we will see the Austria index in the neighborhood of 70,000 basis points. So I believe that investors are really poised for this because there is really a good take after the entire financial year for year 2023.
Looking at that 70,000 that you just mentioned now is mouth-watering. I'm looking forward to it. But let's go back to FBN Holdings. What do you think? Is it the reaction to the president's suspension of taxes that drove FBN's share price to go up and then drove the buy interest in FBN Holdings? And how high do you think FBN Holdings share price will go?
Well, it's very difficult to tell at this time how far it's going to go because it still has a lot of upside. And the market sentiment right now is a situation whereby in time past, we used to see performance to be related to 10% dividend yield. But I think all that has changed now. Investors and operators are looking at a situation whereby 5% dividend yield is still very much okay. So for us having the likes of Stanbic at close to 60, GTCO tending towards 14 naira. Definitely, I don't foresee FBN Holdings resting below 25 naira as the time goes on.
Interesting moves there. What about the big guys in the market? Is Airtel making any moves?
Well, not yet, but I expect that we're going to see a good round of movement in that particular sector, and especially Airtel. And bearing in mind that the all-time high, 52-week high for Airtel is 2,014 naira. And so for where we are right now, I believe we are just we are still scratching the head. I've not really hit the reason. So if anyone is looking for anything to buy in the telecoms, I think Airtel should be the preferred stock.
Okay. Well, just very quickly, very briefly, how much of an impact do you think the negative FDI that was just reported, Nigeria's negative, the first in over 33 years, how much impact is it going to have on the equities market? The
Well,
negative foreign direct investment?
I don't see it having a negative impact on the market because this is what we have been living with in the last 3-4 years. At least we felt the impact more after COVID. So the only thing that could happen now is an expectation of a turnaround. And with the expectation of a turnaround, then the other way, the further expectation is that the prices of securities will go up in anticipation of foreign portfolio investment coming in, as well as foreign direct investment. So I don't really, it's not going to have any negative impact, but creates a future expectation that things turn around, we're definitely going to have it better.
So we're heading for a bullish close today again as well, I can imagine.
Listen what?
We're heading for a bullish close today, right?
About how the market is going to close
yes,
today?
A bullish close. Do you foresee a bullish close today? No turnaround, no negative close, bullish close all the way.
It's not going to be a negative close. Because so far this week, we have had about 5.55% appreciation in the market compared to where it ended last week. So for today, I see it ending better than what the market is trading right now. So it's positive right now, but it's going to be much more positive. I only hope that we may be able to end up at 30,000 basis points today.
Okay, thank you so much, Rotimi Fakayejo, capital market analyst, for sharing those insights on the markets. Thank you. Now let's go over to the Middle East markets and see where most indexes were closed today. However, markets in the UAE were trading with bullish sentiments at intraday. We see the Abu Dhabi index up 0.08%. Dubai also was marginally up 0.01%. Elsewhere, Saudi and the Qatari indexes were closed on Thursday for the week. Now, remember when Bitcoin and other cryptos seemed to be the hottest assets around the world? That's a few years ago, and the sector has been out of the news for a while. But just this week, Bitcoin has crawled up to its highest price in over a year. Deutsche Welle's Lars Walter joins me from Berlin. Lars, you've been following this development. What can you tell us about it?
Yeah, thanks for having me. Indeed, Bitcoin just recently crawled over 30,000, and this week over $31,000 is the highest the cryptocurrency has seen in over a year. And it's due to renewed interest from Wall Street. Specifically, BlackRock is interested in Bitcoin. BlackRock is the world's largest asset management firm. It holds almost $9 trillion in assets. And the firm runs iShares, which is the largest U.S. family of exchange-traded funds, better known as ETFs. Now, these are a preferred way for many investors to play the markets because they are derivatives that often trade in relation to a group of shares or similar assets. BlackRock alone has $4 trillion in assets under management in just this one business, focusing on ETFs. And they've tried to establish an ETF tied to the spot price of Bitcoin. And other firms, by the way, have tried that too. But the Securities and Exchange Commission in the US, that is the regulator overseeing Wall Street, they have so far not allowed any such ETF. And now BlackRock has filed once more. And the company is optimistic that they can convince the SEC to allow this. And that would bring renewed interest and a lot of money to cryptos. Hence the recent rally with not only Bitcoin, but also other cryptos reaching higher valuations.
So how likely is it that the SEC will actually greenlight this spot Bitcoin ETF?
Yeah, that's the billion-dollar question, literally. As I said, so far the SEC has routinely rejected any application for an ETF tied to the price of Bitcoin. But BlackRock says they are specifically addressing the SEC's previous concerns, and that includes oversight of the funds and such issues. In previous prospects, there were often loopholes that allowed customer assets to be diverted to unauthorized parties. And that is something that we've seen in the case of the failed crypto exchange FTX, for example. That firm's founder, Sam Bankman-Fried, allegedly moved customer funds to his private trading firm and just went on spending it. He's currently under indictment for money laundering. So without going into too much of the fine print, there have always been regulatory questions questions and questions of oversight. And BlackRock says they feel comfortable they've addressed these issues now and that an ETF might actually be coming.
So how would such a massive investment in Bitcoin impact the crypto market?
Well, one analyst has said, and I quote, "This would end the crypto winter." I find this interesting and a bit scary because as much as the rise of crypto was a huge story and a certainly promising opportunity for many a few years ago, there was of course also a huge amount of risk in investing in Bitcoin and in other such currencies. So maybe it wasn't bad in a way to be in that crypto winter. Anyway, interest in Bitcoin would certainly skyrocket if BlackRock and other possible firms would offer ETFs. That begs the question, how much Bitcoin could these firms actually buy and how much impact would that have on the markets? I found some research that says if the 5 largest asset management firms would only invest 1% of their capital in Bitcoin, that would be an influx of $250 billion. But there would likely not be enough crypto available to satisfy demand because Bitcoin is limited to 21 million coins and around 3/4 of those are tied to investors who are not selling. So one analyst says that around $125 billion worth of Bitcoin are likely investable right now. And so that's half the amount the world's largest investors could put in. Were that to happen, it would certainly be a game changer for crypto markets.
Certainly would be a game changer, Lars. Thank you so much for that update. Now move over to other markets in Asia, where Asia Pacific marked a second day of declines after Wall Street sold off on stronger than expected U.S. jobs data, leaving room for more rate hikes ahead for the Federal Reserve. The data also followed minutes of the Federal Reserve's June meeting released Wednesday, which showed that most officials would support more rate increases ahead. U.S. Secretary of Treasury Janet Yellen is in Beijing for a 4-day trip to meet Chinese officials, marking a deepening thaw in ties between the U.S. and China. Hong Kong's Hang Seng Index fell 0.86% at the close of trade. In mainland China, we saw Shanghai Composite falling 0.27% and the Shenzhen Component falling 0.72%. In Australia, the S&P 200 fell 1.69%, leading losses in the region. Japan's Nikkei 225 fell 1.17% to end the session, and in South Korea, the Kospi slid 1.16% to close. Now, as this comes as Samsung Electronics estimated a 96% likely plunge in its second quarter operating profits. Now in the U.S., stock futures were little changed Friday as investors refocused their attention on the upcoming June payrolls report and the implications for the Federal Reserve's policy stance. Futures tied to the Dow Jones Industrial Average and S&P 500 futures were trading in negative territory. NASDAQ 100 futures, however, slipped by 0.2%. That's the highest. Now in other after-hours action, shares of Levi Strauss tumbled 6% as the denim giant cut its profit outlook for the year. Let's have a quick look of the summary from yesterday's trading close with Maria Bird.
The U.S. stock market tumbled on Thursday as the Dow Jones was down by 1.1%, the S&P 500 down by 0.8%, and the heavy-tech Nasdaq down by 0.8% as well. It is clear that June notes of the Federal Reserve's meeting did not make investors feel comfortable as interest rate hikes are on the way for 2023. It is also a 95% chance that the July meeting will also have a consensus for continued interest rate hikes. This is mostly due to the fact that the U.S. job market is strong and that there's a low rate of jobless claims. This could end up leading the U.S. economy into a recession if interest rate hikes increase and continue to increase. This is all potentially going to have a great impact on the U.S. economy.
Thanks, Maria. Now, oil prices, if we look at the global oil space, were largely unchanged in early trade on Friday, but set to post weekly gains as fears of higher U.S. interest rates that could dampen energy demand were offset by signs of tighter supply after a larger than expected fall in U.S. oil stocks. Brent crude futures were down 1 cent at $76.51 a barrel, while U.S. West Texas Intermediate crude gained 2 cents to $71.82 a barrel. Both benchmarks were set to gain about 2% for the second straight week. U.S. crude futures stocks drew more than expected on strong refining demand, while gasoline inventories posted a large draw after an increase in driving last week, according to data from the Energy Information Administration. And this comes as top oil exporters Saudi Arabia and Russia announced a fresh round of output cuts for August. However, oil prices were capped on strengthening expectations. The U.S. Central Bank is likely to raise rates at their July 25 to 26 meeting after holding rates steady at 5% to 5.25% in June. After the break, Kenya's GDP growth was higher than expected this quarter, in the first quarter of 2023. That conversation next. This is Business Incorporated. Welcome back. Now, Kenya's economy grew faster than expected in the first quarter of 2023 after the agriculture sector snapped 4 consecutive quarters of contraction. Gross domestic product in the first 3 months of 2023 rose 5.3% year-on-year, the fastest quarterly growth in a year. Now, that's according to Kenya's National Bureau of Statistics. Matt Kindiga, practice leader, Sub-Saharan Africa, joins me now. Good afternoon, Matt. It's good to have you on the program. Well, Matt, what do you make of this latest GDP growth figures? Tell us about how this impacts the health of the Kenyan economy.
Hi, well, thanks for having me on the program today. So certainly, as you mentioned, it is data that has been surprising to the positive. So Kenya's fastest growth in over a year, and also a substantial improvement on Q4 2023 when the economy slowed to 3.7% year on year. As we have seen, really interestingly, a broad-based improvement in growth, and this is extremely positive for Kenya. And this does suggest that actually Kenya's economy is doing a lot better than we previously expected. The agriculture industry has posted its first growth in about 6 quarters, which is very positive after a very protracted drought there, but also a number of sectors, including very important sectors for Kenya's economic diversification, including ICT, hospitality, retail trade, financial services, all grew by more than headline GDP growth. So they grew by, at least 6 or 7% year on year. And what this does suggest is that despite the social unrest that Kenya saw earlier this year, so in the first quarter of this year, we were expecting to see economic growth slow down because of the protests that were taking place, and also because of very severe foreign currency shortages that the country was facing. It looks as if these haven't had as negative an effect on the economy as we were expecting. And what this all means is actually that we are probably going to be revising up our growth forecast for Kenya to about 4 or 5% this year. So certainly, quite an optimistic view for the markets over the course of the next 12 months.
So how will the government's new finance bill affect the economy this year?
Yeah, so one of the reasons why we were expecting a more pronounced slowdown in Kenya's growth outlook was because of very weak public finances. So public finances have deteriorated quite consistently, but also at a much faster pace over the last 6 months or so. And the government, through its new finance bill, its 2023 finance bill, is raising taxes and cutting spending. And these are very unpopular with the private sector, with households, and with private businesses. And this is because it will be raising income taxes, consumption taxes, digital transaction taxes, for example, introducing a higher rate of value-added tax on fuel. So we certainly expect there to be a bit of a reduction in sentiment, maybe over the next few months. Perhaps a bit of a slowdown in domestic consumption and investment in Q3, perhaps. But I will emphasize that the new finance bill is part of a broader set of measures that the government is introducing in order to consolidate public finances and to avoid a state of debt distress emerging, and in a worst-case scenario, a default next year. So this is really quite positive for the longer-term economic outlook for Kenya, especially as we look to 2024. We believe that this will boost investor sentiment in the long term. It also will mean that the shilling is likely to stabilize a bit as a result of improved investor sentiment as the government stabilizes its public finances.
So we do know that the Central Bank of Kenya is seeing a 5.5% GDP growth overall by the end of the year. Do you share this opinion or this forecast?
So we're not quite as optimistic. I wouldn't expect to see the economy reach quite 5.5%. We probably, as I mentioned, we are probably going to expect to see a little bit of a slowdown in Q3. and then a bit of an uptick in economic growth as the first effects of the finance bill begin to sort of recede a bit. So we're probably forecasting growth of between 4 and 5%, maybe 4.5% as a base case and 5% as an upside. So certainly, a bit more optimistic than we were previously expecting, but not quite 5.5%.
And so what does the future look like for the shilling? I do know there's been taking a pounding recently.
Yeah, so unfortunately, the shilling really has been taking a pounding, as you said. It has lost substantial value since the start of this year. Pretty much every week it reaches a fresh record low against the dollar. It's currently at about 140 per dollar. We are forecasting further depreciation to about 150 per dollar. So we would expect it to reach about 150 per dollar by the end of this year, after which it will probably stabilize a bit. There are a couple of things driving down the value of the shilling. So it has been kept artificially high by the central bank. It is still overvalued in our view. Kenya does have quite a substantial current account deficit. And we are going to see, consistent pressures on emerging market currencies driven by further interest rate increases by the US Federal Reserve, for example. And because Kenya's economy will be sucking in imports because it is growing quite well and exports are relatively muted, this will put a bit more downward pressure on the currency. However, in 2024, as the economy begins to accelerate, as we begin to see an improvement in tourist arrivals as well in the country, we would expect to see a bit of a stabilization in the currency. We don't expect it to fall much beyond 155 per dollar in 2024. So some more weakening this year, followed by a bit more stabilization in 2024.
Thank you so much, Matt. I do know you'll be keeping track of that at Frontier View, and you'll be keeping us up to date as well. Thank you so much, Matt Kiniger, Practice Leader, Sub-Saharan Africa, Frontier View, for sharing your insights.
Great. Thanks for having me on the program today.
Now we go over to Uganda, where truck drivers have staged a peaceful protest at the illegal border point in illegal town council in Amuru district, demanding the release of their colleagues and trucks impounded by South Sudan authorities. This follows nearly 2 months of fruitless negotiation between the Ugandan and the South Sudan authorities over the release of 74 trucks impounded at Limule Township. The trucks loaded with wheat, maize, grains, millet grains, and maize flour were impounded on May the 15th by the South Sudan National Bureau of Standards, SSNBS, for alleged contamination with aflatoxin. According to the Illegal Women Cross-Border Cooperative Society, says the current standoff between the South Sudan authorities and Uganda businessmen is detrimental to the bilateral relationship between the two states and could create food insecurity. Now, the European Union, EU, has given Zimbabwe 2 years to grow tobacco sustainably or face a ban on exports. Tobacco is Zimbabwe's 4th largest foreign currency earner after gold, platinum, and diaspora remittances. The EU buys tobacco worth $150 million yearly from Zimbabwe. Meanwhile, Zimbabwe's Deputy Minister, Lands, Agriculture, Fisheries, Water and Rural Development, Davison Marapira, says the government has developed and successfully tested more efficient tobacco curing bans. Zimbabwe has recorded the highest tobacco yield in its history as sales for the ongoing 2023 marketing season currently stands at 283 million kilograms, surpassing the previous record of 259 million kilograms achieved in the 2019 season. Now, efforts are underway to develop Ethiopia's financial markets as the government prepares to launch its first ever securities exchange, ESX, in 2024. As a pioneer securities exchange and market organizer, the platform will play a critical role in the development and growth of the Ethiopian capital markets, experts do say. Now, ESX will deploy a state-of-the-art electronic trading platform for the equity and fixed income markets, as well as an innovative alternative capital market that caters specifically to up-and-coming SMEs. And that's a wrap on the final edition of Business Incorporated for this week. Thank you for watching. I'm Will Ibong. Bye for now.